Broadcast is now starting. All attendees are in listen-only mode.
Hello, attendees of Trade Ideas Trade of the Week webinar. Welcome to the Tuesday edition. My name is Steve. I'll be your host, joined by Andy. Hello, Andy.
Hello, Steve. Hi, everybody.
All right. We are just going to get right into it this week. Normally we have our Director of Marketing, Scott, but he is not available. So I'm going to go ahead and record this webinar. And we'll go ahead and forego the polling this time. I think we've got an interesting mix of people with our test drive week and our regulars kind of intertwined. So let's just get right into it. All right, the old disclaimer, first slide of the day, just reminding you all that we're content publishers, software as a service company. We're going to talk about some technology of our software as it relates to the markets and stocks, but please do not construe any of that as investment advice. We're not giving out investment advice. If you need that, you got to talk to the guys who are licensed and the brokers to do that. And thank you, Waleed. Thank you, John, for letting me know. That was my next question, that you can see and hear me. Good to know. All right. For the newer people that are just pulling up a chair and not familiar with who we are, we're Trade Ideas, and we're a 14-year-old technology platform that scans the market in real time for U.S. equities and some Canadian equities. The purpose of this slide is to remind new traders, if they join us for at least a month or longer, that the onboarding process and the concierge, the customer service really is second to none. We've got a lot of people devoted to making sure that your understanding of the product and the way in which you want to use the product is available to you. So aside from our website with the chat window in the bottom right during market hours, a lot of you have been in there and talked to Bill or William or myself, Sean and Andy. That's always available during the regular hours. I'm going to skip to the bottom down here. I added that little piece. Monday through Thursday is Trade Ideas University, if I can get that menu off of there. Trade Ideas University, Monday through Thursday, 12 to 1:30 Eastern, is now taking the place of the one-on-ones. And so we have a good handful of people coming in. Monday is basic, and we finished on Thursday in the more advanced pre-canned topics to be discussed. That's in the morning, so to speak, or the 12 afternoon Eastern. In the afternoons, much like you're listening now, we have a lot of 5 o'clock Eastern afternoon webinars after the markets closed. Yesterday was Jamie and myself. Today is myself hosting the Trade of the Week as the theme, along with Andy. Tomorrow will be Dan and Brad, two of the founders of the company. And then Thursday afternoon, Andy takes the helm, and Jamie rides shotgun with Andy. So we counted it up, including our Friday, which I hadn't even mentioned yet. Friday is come one, come all, open to everybody, kind of like what we're doing during this week for the test drive. The Trade Ideas University will start up again next Monday, but we've had webinar after webinar trying to make you guys as accessible as possible to get the most out of your subscription. And then lastly, on the right here is the Trade Ideas live trading room, hosted by Barry Anderson, who does a great job moderating the room, 500 people on a given day, and then trading his own account using Trade Ideas software and helping people with questions. And not to mention, there's a handful of really good traders in there as well that like to call out some ideas and help people with continued education. And the Trade Ideas live trading room is free, which is a really good price if you consider that compared to some of the other chat rooms and live trading rooms out there. Which all really in turn translates into a nice parabolic subscriber growth. We thank you all for your support. And then we're getting ready to get started here. I always use this slide to get us started, that no man is better than a machine, and no machine is better than a man with a machine. That's by Paul Tudor Jones, a great living hedge fund manager. So in this case, let's get into it. We're the humans, and the machine is the Trade Ideas platform. How can we use that to our advantage and help us with an edge? So the agenda for today is, as usual, a market recap. Got a lot of interesting things to talk about that happened today and yesterday in the market. We'll go through the Holly AI recap, talk about what a gap up start we had in the market and how that can affect the AI sometimes. Trade of the week was the same as last week, and just like last week, it was not triggered, but we're going to talk about the genesis of coming up with that trade of the week and why it was selected and where we might be going from here for future picks. And then, we had a really interesting session this morning helping somebody build a Fibonacci pullback alert, and it kind of had a few light bulbs go off in my head. And Andy really is the catalyst of that. And I've taken that concept and going to take it a little step further. And I think, for those of you who understand what Fibonacci's are and want to look for pullbacks that pull back to a Fibonacci level, there's just one real simple filter that's going to do it all for us. And then I'm going to kind of broaden things up a little bit and show you how we can use a multi-strategy alert window to kind of parse it out a little bit. And then time permitting, we'll take maybe 5 minutes and look at a few charts as well. So that is our agenda for today. Let's just start with market recap, looking at the SPY. I don't know if any of you attended yesterday with Jamie, but obviously this green candle is today's data. Yesterday's data was snuggled up right along this orange line. I'm going to make that orange line more apparent to you with a different perspective here in a moment. But it also snuggled right up below the declining blue line, which is the 50-day moving average. So we had a lot of headwinds into the close yesterday. And today, well, what do you know? We gapped above both of those resistance levels and basically closed above. I mean, there was always an opportunity that we could have traded above and then wicked right back down and closed in the range. And I'm kind of glad that didn't happen, guys, because this pivot line here is something I really want to focus on. And it also will come into play when I talk about the trade of the week. A pivot line is something that was prior support and then becomes, future resistance. Even backing out here, this pivot line extends all the way to the breakout that we had. A lot of congestion at the end of the year, and then boom, a breakout from that base. We traded down through that base and then kind of held some interesting levels here. The body of that candle holding, the low of that candle holding. Here's the high as support, I might say, and then the high of this candle below that gap, kind of creating resistance, which if we go into this red candle, this is the data point we had to work with on, perfect. My little scroll bar worked perfectly. So this is what we had to look at on Friday, guys, before we got Monday and Tuesday's data. So that orange line, I want to try and give you another perspective of what that orange line is. I want to pull way out here. And there we go. So this is a multi-day 15-minute chart. And as you can see, we've got a nice kind of a jagged base building. Here's the lowest test of the period, with everything else kind of being a secondary test. And so this is kind of the anatomy of building a base. And this is a 15-minute time period. So, what I noticed was that, this orange line, I could probably even move it up here just a little bit. I don't know how it got down there. It should be right about here. There we go. Support back here, then became resistance right here, became resistance again. Actually, what was that? The 2 days ago, I believe. Or 1 day ago, yeah, we became resistance again. So, coming into the weekend, looking at my 15-minute chart, this could have, and again, the operative word is could have, and I'm speaking in Friday's terms, could develop into a really nice base, and then maybe the market wants to move higher. But until we clear, number one, that pivot level, which just so happened to line up with the blue line 50-period declining moving average, again, this is Friday's chart with that red candle. That's all we had to work with. Well, fast forward to today. There we go. Fast forward to today, and we've broken through those nets. We've broken through those barriers, albeit on some pretty tiny volume. I mean, look at the volume back here with the volatility, and then we basically, again, there's that, let me define that 200-day moving average. There's that line from the 200-day moving average, which really, for the most part, with a little bit of sloppiness here, was the level that held. And the level that held was still underneath this pivot level. And so I think we had a bit of resolution today for the upside. That's what the bulls wanted to see. They've cleared all the moving average obstacles. We're even getting the 10 period starting to curl back up again. So, we're out of no man's land, which I would have equated to be below the pivot line, but yet above the 200. And I'll talk a little bit more about this when we get to the trade of the week. But for today's action, this was a win for the bulls, albeit on anemic volume. I hate to say it, but the price action did lead the way, but on very, very light volume. Let's see how that, how that works out. And Andy pointed out in our little conference before we came online that, there's still some work to be done. Trend lines are still intact. Trend lines are still in use, I should say. But for the most part, the pivot was the real black and white level that I've been watching going all the way back, to the beginning of the year, end of last year. And so a win for the bulls today on low volume, but it is what it is. So let's take a look at the Qs. I happen to see that a lot of the FANG stocks, see, look what the Qs did. They did the same thing. They busted way above their 50-day moving average as well. Real quick look at Facebook, had a nice day. Twitter had an excellent day. Google had a nice day. Amazon had a nice day. So there was panic tech buying, so to speak, once the market realized that we were going to push back through these levels of pivots and levels of resistance. So there's a little bit of white space here, but our next level of interest could very well be this declining trend line that I put in there. Now, one thing that could be in the bulls camp going forward, we still have 3 days left in this week to kind of finish out the week. Here's what could very well happen, and it could be still a good thing for the bulls. We could just kind of slide back, maybe a little backing and filling, but the pivot line, as I've said 19 times already in this webinar, is a level that was prior support that becomes current resistance. Well, if it was current resistance last week and last month, and we busted through it today, if we have a nice 2 or 3 day pullback and we settle right on that level, that's, again, the continuing working definition of a pivot. So it wouldn't be a bad thing to see a little bit of digestion of the last 7 or 8 days of a low volume creep up, and maybe rest on that line for another push higher. That's always a possibility. But again, the last line of defense we're watching here is this declining trend line. So we'll be watching that. But again, golf clap for the bulls. They were able to gap up and trade and close above the pivot line and the 50 in both the S&P 500 and the Q. So it's pretty good victory for them in the most part. Again, the only suspect would be the light volume. I haven't even really looked much at the Dow. Dow, again, same thing, gap above, slight doji range, but closed above the 50. That's something that we haven't been able to do in the period of volatility that we've recently been experiencing. Anything you want to add, Mr. Lindloff?
Yeah, Steve, I agree with a lot of things that you said. If you'll just go back to the spiders daily and stretch it out for me. I'm sorry, spiders. There we go.
There we go. Okay.
Yeah. I mean, yes, I agree with everything you said. We are, back above those moving averages. Does that mean it's, clear sailing? By no means. We did fill the gap there, and
right
but
here.
If you look at right there, we filled that gap today and then backed off, or maybe got close. Yeah, we filled it and backed off. He's drawing that gap. You look at the high going back in January and also the low in February. We're probably pretty much right smack dab in the middle of the range. So bulls versus bears, if you're looking at the range, you're probably it's a tie score right now. Bulls given a little bit advantage because they are back over their moving averages. But oh man, yeah, nothing that it's hard for me to get excited to the long side. I mean, we'll see what happens. You do have that trend line to, but other than, like Steve said, breaking out of that kind of resistance area and closing above the 50, you definitely can't, if you're a bull, throw up your hands in the air thinking we're just going to go back to all-time highs. I'm still seeing a lot of stuff, like I mentioned the other day in my Thursday webinar. A lot of those things that I see happening are happening today. Now, the Qs had a great move, but gosh, look at that weighting in the Qs. The 4 stocks that Steve just showed you, account for about 40% of the Qs. So, yeah, I'm still going to need a little more time to get very bullish on this market. And there's an example right there. Soda looked like just a perfect breakout today. And Holly even called it. And just look at that, just opened up and just pretty much sold off all day as the market was kept just going to highs. So, it's not typical of a bull market when you see just failed breakout after failed breakout, and I've seen a lot of these lately. So we'll see what happens. But
well, what else, Andy? We're right in the middle of earnings season, and a couple of earnings have come out today. Let's take a look at how they're doing after market. IBM apparently did pretty well and even raised their guidance on their earnings. How's the market reacting? Okay,
Mm-hmm.
so good news doesn't always mean good news and should
No.
mean good news. What this is, here's another one. LRCX beat their earnings per share by 41 cents after market. And look at the reaction to that. So guys, when you start seeing stuff like this, the phrase "the market is priced to perfection" starts to come to mind here. When good news, when stocks sell off on good earnings, that means it was already priced in. So
You can look at Goldman Sachs today is a good example too.
yeah,
Just an ugly day.
started off in the green and giant engulfing candle pattern to the downside there in Goldman Sachs. And the financials have not really done that great. I mean, XLF did better today, but look, this one's still being under the 50. It hasn't quite busted through that one yet. But I thought it was interesting to note that IBM and LRCX had good earnings. However, they seem to be priced to perfection. And if that's going to be the tone for this earnings season, then be very careful if you're going to be trying to hold through earnings, because you could read the headline and get all excited, and then pull up IBM and then go to the post market and say, well, what the market's not wrong, I'm wrong. But most people would say the market's wrong, I'm not wrong. But that's the market for you. It's how it reacts,
Mm-hmm.
not what you think it should do. All right, so I'm going to preface today's AI Holly segment by talking about gap ups. There's something about the gap ups when the market gaps up that the AI usually gets off to a slow start or even has a soft day, because what's happening is a lot of these setups and configurations of our strategies, they're looking to yesterday's highs or breakouts or things in relation to the last few days ranges. But when we get a gap up right on the open, it really does throw a monkey wrench in some of these strategies, and it's interesting. And so we've definitely made mental note of that, and we're aware of it. But nonetheless, Holly was able to have a rough start here, I think, because of the gap up.
Mm-hmm.
A couple of the first trades that came through were not breakout trades, they were pullback trades, pulling back, strong stocks pulling back, etc. But by midday, the AI definitely found the footing. And my observations are always, what was the directional bias today? What was the path of least resistance? And you can see there pretty much without argument was long. The market confirmed that. But after a gap up, be aware for people that want to use Holly in the future that gap ups can kind of slow things down a little bit. We never really know when we're going to get a gap up, especially in the back testing of the evening as the AI goes through the million practice trades and filter rejiggers and filter changes. It's just assuming the market's going to open regularly. So when we do get a gap up, sometimes Holly can get off to a slow start. I think today was a great example of that. For most of the day, or for the first half of 2/3 of the day, risk off was outperforming risk on. And for those that are not aware, risk off is essentially exiting at the same time that Holly exits the trade, which is the time stop quotient here. But risk on many times can do a lot better than risk off at the end of the day. A stock like SAIL, basically Holly had to get out here in the middle of the move. And if you look at the daily chart, there really was no reason to get out to yourself. So here's where the man and machine kind of come together. We got to remember that Holly is a statistical probable alert, and it's still up to us to be the discretionary decision maker on what to do. In aggregate, when you look at all the trades together and look at this risk on versus risk off bar, sure, we can get a little bit of information as to kind of what the day is bringing. Is it a hold to the close, keep the risk on the table type of a day, or is it a get in, get out, take the money while you can, risk off type of a day? And this goes true for not just the Holly trades, but whatever you might be in as well. I mean, you're using Holly as the canary in the coal mine to figure out what's the path of least resistance directionally wise. And is risk on or risk off working any better? Yes, good joke, David. Sail kept on sailing. Let's see how it's doing
Yeah, it
after
did.
market. And to do a nothing after market. But yes, that was a good one for sure. But again, it still requires, the eyeball of the discretionary trader to come in and evaluate these charts. And if they resonate with you, then great. You've got the statistical odds and probabilities at your back, so to speak. So, those were a couple of my observations. Let's turn it over to Andy and see if he's got some ideas to talk about as well.
Yeah, sure, Steve. I'm just going to go ahead. It makes it easier if I just take it to take it real quick. Hold on just a minute, and I'll give it back to you. Give you a little break. Give you a chance maybe to go play some Club Penguin or something.
Okay, let me log in.
All right. All right, guys. Well, yeah, let's take a look at Holly today. And like Steve said, she got off to a slow start. I'll just go ahead and pull up the timed entries there, sorted by entries. And you can see here in the morning that, the early trades there was some, stop hits, some reduced risk, profit save for zero. So the first handful of trades didn't work out all that great. Now this risk on finally started doing a little bit better as the market went higher. But Steve and I, once again, we're getting a little bit nervous because we know how tough it can be when on a gap up day for Holly. But man, I think she really proved herself and proved us wrong just by let's take a look at some of these. Let's sort by risk off. I'm not going to do by risk on because I know risk on is terrible. Because let's take a look at the histogram on risk off. Slow start, there's your slow start, but bam, look at that, and pretty much held firm all day and moved higher. Risk off today was a little bit, choppy back and forth. You had to sit through a lot of ebbs and flows, and I know it's hard to do. And so, but let's just take a look at some of these trades here. We're going to look about 5 of them. And I do this quite frequently just because I want to show you some of these incredible entries, that Holly makes, where we call them no pain trades. And we're going to focus on risk off. Although there was some examples like sale, for example, that David just pointed out, where you might want to have stayed in that one, and I'll show you the daily chart on that and see what we're looking at. But let's take a look at MRTX here. Once again, okay, this is from the strategy bullish pullback. So you can see the line right there, the blue line, where AI's alert came out at 31.40. It was a pullback, and that was pretty much the low of the move, and it had a nice move up 75 cents, and there was the sell. Just a beautiful trade. CVGW. Once again, this is float on. You can see the entry right there at 97.65. Once again, a no pain trade. What I mean by that? It never went against you. Take the position, and it just kept going. Holly got out for a nice 60-cent winner. You can see where she sold it right there where it says sell. Now, speaking of sale, here you go, another one. Buyers stepping in. So the stock tried to pull back, and Holly noticed some buyers stepping in just by the way the stock was holding up. You got your signal there at 23.07, and wow, what a beautiful move. Now, this happens to be there's your breakout right there, one that did hold up today. So I guess not all of them, go through and then pull back. So there's an example of one that did follow through. But even if you did take risk off, 41 cents, not a bad trade. But one you might want to gamble a little bit on, give it a chance to go through. If it looks like it's not, in other words, if it goes through and comes right back down, you get out. Like Holly did in the, which one was it? Soda today. It was a stop hit, but she did get out. All right, let's take a look at FBHS. Beautiful, on support. So what is this? It's contrarian play. The stock gapped up, pulled back. There is your signal. Once again, no pain, nice little bounce, gets out for a 32-cent winner. Take a look at one more. I'm not even sure if this one, once again, there you go. Buyer stepping in, pullback, buyer stepping in. No pain. Actually, you had a little more profit in this. Should you have taken it, but still pulled back. Holly got out for a 30-cent gain. So really a great day, even on risk off. You're talking about 183 on a market that kind of, gapped up a good portion of its gains today. And, comparing the losses down here to Holly's all this green that you see from here on up, not a bad day at all. Not a bad day at the office for Holly. So, but what makes it even better, guys, is what I'm showing you is when those precise entries, that it's worth its weight in gold just because you're not experiencing any pain. It's just, I love it when I see that, especially when it's on a pullback, so pay attention to those because those on support, any type of pullback, because man,
Well, pay attention because we're going to talk more about that in the coming up alert that we're going to talk about. The Fibonacci pullback might be something of interest for you, some of you guys. All right, so I'll take the screen back here.
Take it back.
Get my Club Penguin off. All right.
Okay.
A couple things that came to me real quickly. One, if you guys ever want to see a history of Holly trades, you can go into the right click and history time frame panel. I mean, you could go back, 20 days, 14 days. Here's 14 days. That's what 14 days of data would look like. And then you could scroll through and see what's going on. That's one point of interest that I thought I would mention before somebody asked. The other thing is, like Andy said, the value of Holly is an aggregate, long-term casino type odds. She's definitely outperforming the market. This is something from our back end, but this goes back to 2017 January. The blue line is the S&P, and then here you can kind of see that familiar shape that we're in right now. But what has Holly done? And this is in risk on mode. That's what made me think about that. Is a lot of days, staying in risk on and riding it to the end of the day can give you more returns than just the simple risk off mode, getting out when she gets out. So here's a nice visual that's, again, part of our back office. I just wanted to see, wanted some of you guys to be able to imprint on that when we say casino odds in the long run, that, yeah, she might throw in a clunker here and there every now and then, but in the long run, these are statistically weighted and probable type of entries. All right, let's move on to the trade of the week. And for those that are paying attention, the trade of the week was the same trade of the week that we had last week. All right, now why? We went again. I'm going to go back to SPY, and I'm going to inflate this a little bit, and I'm going to roll it back a click. I wonder if I can still do that. Let's see if I can do that. No. I'm going to try and get tricky with it. There it is. So this is what we had to work with going into the weekend. Volatility to the downside, trying to hold that 200, bouncing back up through the 20. It got hung up there by a couple of days, and then it moved through. But going into the weekend, we had a S&P 500 SPY that was essentially under that base that I was trying to show you guys. And so the last thing we wanted to do was come in and hope and pray that the price action would resolve itself and move through. But we're not really in the business of trying to guess. We'd like to have some confirmation. So I kept it at a 30,000 foot view, waiting for confirmation. And this is really the reason that no long call was made for the trade of the week, because we were running right smack into a buzzsaw of resistance and sellers. Well, as it turned out, worked out okay. So now, if everything stays good and we don't really give too much back, well, we can expect probably a long side trade of the week next week. For those that don't know what I was talking about, SPXU was the trade of the week for the last 2 weeks to protect us in case the market did try to break back down, essentially below that candle right there. That was the markup. That was the trigger line. If the S&P had actually failed and rolled over this midweek and then triggered that would have been a head start to new fresh lows. That would have been the idea of the trade of the week, because the cupboard was bare for a second week in a row. We just weren't seeing a lot. Sure, there were a few setups that looked interesting, but the last thing we wanted to do was have a setup trigger on Monday, only on the open, the euphoric opening on Monday, only to get sold and run back and wick all the way in reverse. Now we've got an open trade that triggered and a market that's not conducive for it. So again, 30,000 foot view. What's the market doing first? And I was a very strong proponent in our discussions this weekend to not call along until this particular base was resolved. And as it is, today we resolved that base by gapping above it and actually looking at this and saying, okay, this does look like it could be a base now. I could be wrong. The market made me look wrong before, but that's where we are. So back out of no man's land, up back into above the pivot. You're either above the pivot or you're below it. And so since we were below it, I didn't want to call along. And the idea was if the market got weak, we could still use that head start trigger right about there to participate on the downside. But it appears that may not be a trade of the week that's going to trigger this week if all things hold the way they were yesterday and today. But what it does is it clears the brush for us to get a better feel for calling along. And hopefully having that jive with the bigger picture. So that was the trade of the week. SPXU carried over from last week, still didn't trigger, but hopefully you guys can see why we were it was very trepidatious for us to want to go in and call a long until we had the actual market resolve itself coming out of that pivot level. All right, that's my explanation. Anything you want to add, by all means.
No. I totally agree with Steve. As a matter of fact, we always look. I help Steve look for trades of the week, and a couple of them that I found, for the long side. Not that I was thinking that much long, but we like to look at every, possibility. Well, they both triggered, and they had a good day yesterday, but lo and behold, they're pulling back today as the market went higher. So it's like I would be nervous right now if we were long. It's just that type of market, where it's just it's got a lot of funny characteristics to it, and
like IBM.
It wouldn't surprise me a bit tomorrow if we sold off and had a dark cloud cover over today's candlestick. I don't know. Wouldn't surprise me.
Nothing would surprise me the way it's been the last couple of months here. All right, so let's venture into some new territory here. This is an alert that I've started, and I've got kind of a plan on what I want to do. So the topic came up earlier today in a webinar. How can I see pullbacks that are a Fibonacci pullback? Well, we do have some Fibonacci events, but I don't really like them as much as I like the way we kind of reverse engineered this method of identifying a Fibonacci pullback. For those that are not aware, Fibonacci is the golden ratio. You find it in nature, you find it everywhere, and a lot of people find it in stock trading charts and price action as well. And the theory is usually, you know what it is, Andy? I don't know. It must be Tuesday at 2:30 is when the lawnmower man always shows up for me.
Yeah, I know it. I know what you're going
through. Okay. Let me just close the window because it's going to bother me more than it bothers you all.
Because we don't even hear it. Yeah.
All right. So, for those that are not aware, the Fibonacci is a very interesting indicator in and out of the markets financially. It's in nature. It's everywhere. And so, some of the stop points, some of the nodes, like if you were to look at your finger is a Fibonacci. The knuckles, the first knuckle is halfway up, and then that second knuckle is about 61.2% of the way up, and then the end of your finger is 100%. So let's take today's candle and use the position in range, and we can create stops at those levels. So what I'm saying is a Fibonacci trader would look at a stock that's running and doesn't want to buy it, but might be interested on a pullback. And the level at which they might be interested in could be a pullback to 61.8% of the range, meaning it pulled back 31.2, I can't do the calculations, 38.2. 38.
There you go.
So 61.2% is one node of interest, and then the 50% node is also interesting. Again, if you guys look at your finger, your middle knuckle is the 50% point, the 61.8 is the 61.2 point. And it works out. It's nature. It's Leonardo da Vinci, the whole thing. So, if you want some more information on the golden ratio and you're not really familiar with what I'm talking about, do some research on Fibonacci. You'll find some interesting stuff in there. So as it correlates to trading, how could we, and this is how we always start with an alert, how can I find things happening in real time that are going to show me a pullback, in this case, to that Fibonacci level? So let's go ahead and break open what I've started here. All right, what I'm starting with is an alert window, and it requires two, I should pay him and he'll go away. Good idea. The lawnmower man, that is. The first part is we need an event for an A window. All right, so our event is essentially, let me hide these, running down confirmed. I'm just going to leave that box empty. Trade ideas identifies the stock as running down. I'm not going to use a 5-minute, 15 or 30-minute low. I'm just going to use running down. Change from the close. I would like these to be positive on the day. I don't want to mess around with stocks that are red. And a great case could be made where you could maybe even put something like 0.5% to make sure it's at least up on the day. But I'm going to leave it at just 0.01, meaning all the stocks that come through here are at least green on the day. The distance from market, that's just kind of a common filter that means that the stock is trading within the spread. It's not trading outside of the spread. That's definitely a Jamie setting. The earnings per share, this will filter out any ETFs. ETFs do not have earnings, so if we put 1 cent in the minimum and negative 1 cent in the maximum, we're fooling the system to only show us stocks that either make money or lose money. It doesn't matter, but ETFs will be taken out. And here is the golden, beautiful filter that we're going to focus on. Aside from the price being 5 to 250, an average daily volume of 350,000 shares, this is the kicker. Position in range. So position in range means we take today's low and assign that 0. We take today's high and we assign that 100. So if somebody sees a strong stock doing well, it's at the highs, well, it's at the 100 on a position in range. But what if they wanted to isolate that? If it did pull back, how could they alert themselves in real time? Well, again, we established that 61.8 is it 61.8 or 61.2? I can't recall. I think it's 61.8. 61.8 is our first stop. And so what we've done is position in range. We have bracketed. The minimum is 60. The maximum is 63. So we're bound to catch something at least in the general vicinity or very close to the Fibonacci. And I'll show you how we can use columns to actually see that value. So when we click OK and launch this, we're basically getting a list of some ideas today. Let's take a look at what came through today. All right, going into the close, let's see here. I think ROL, okay.
Look at that.
Look at that. You see the blue arrow? You see the stock was up, and you see it pulled back. Well, let's take a deeper dive here and look at the position in range. You guys see that I've created this column. 61.1, pretty close, 60.7. So everything in the position and range is going to be running down. That's our alert. But it's only going to flash in our face if it's between 60 and 63% of the position and range. So now it's going to start to give us ideas. Well, there's the arrow there. As I click through these, the arrow is the actual level. So that one was close towards the end of the day. That one had a small bounce. But again, not all of them are going to work, but it's up to you to decide, which ones are worth trading and which ones are not. But the point is, we're going to get you guys an alert when something pulls back to 61.8. Now, I want to take this a step further. As I mentioned, the other, tell me you got to be able to hear that, right?
Nope.
Then I have a good microphone because he's right outside my window. The other level of interest was 50%. So how could we do this? We're going to do almost a 2-for-1 today. We're going to learn not only how to develop this scan, but we're going to learn how to turn this into an M window, how to take this one and then go through the 50% stop as well. So first thing I want to do is I want to launch, first thing I'm going to do is I'm going to right click and I'm going to collaborate. I'm going to collaborate, which means I'm copying all of the settings, kind of like the cloud, but not quite the cloud. Copy all. All right, so that's step 1. Step 2 is to go to a new multi-strategy because we're going to want to create 2 strategies here. And it's blank, as you see. We first need to go in and right-click, strategies, new strategy, and look, I've got the collaborate receive function here. And I'll go ahead and paste all, and there we go. So let me go back in and make sure that that's set because I think there's one more step we have to do. Look at that, it is set. So my alert is set running down, and all my filters are just as I left them in that other window. All right, so interesting. We'll go ahead and give this one a color. Let's start off with, since this is going to be not so far of a pullback, I'm going to do a lighter red color. We'll do background. We'll do kind of a light red, kind of a pink with a foreground in black. Good, got it. So that's going to be our first Fibonacci pullback. And I'm going to believe we've got a little bit of work to do here. Properties. Look at this, text headers. Look at the column headers. I'm going to get rid of those hieroglyphics up there, just like that. Okay, now we can read what we got. And we do have a position in range, but it's showing me a cylinder, and I don't want to have to hover over that cylinder to see the 61.1. So I'm going to right-click, and I'm going to Properties, Graphical Indicator, turning that off. The check mark means it's on. Turning it off, there we go, gives me the value of 61.1. So we've basically transposed this A window of stocks running down, pulling back, but getting hung up at our position and range between 60 and 63% of the day, which would essentially isolate that Fibonacci level of 61.8. All right. Let's see here. Okay, just making sure I'm not missing any questions that really need attention. Now we want to go to the 50 level. We want to show pulling back to the 50. So let's do this. Let's just do the exact same collaboration, everything else being the same. Oops, I don't want to configure. I want to collaborate. All right. And copy all. Okay, now we're going to do new strategy. Multi-window strategy 1 is set. Fibonacci. I'll probably rename that. Actually, I'm not going to rename it. I'm just going to do new strategy, collaborate, paste, and there's the other one. However, we got a little bit of work to do here. We're going to go into this one and change the configuration to isolate the 50% pullback level. So let's go in here and change it from 60 to 63, and let's call it 49 to 51. We'll just keep it real simple. And that is going to be the difference for that particular one. So we're going to have complete...
Why don't you change the name in that one?
Yeah, I need to change the name.
Change it 1 to a 50. Just call it Fibonacci pullback 50.
Fibonacci pullback 50, yeah. Pullback to 50. And then I'll even make sure we do this really nice and tidy. We'll do this first one as well. Fibonacci pullback to 61.8. Now that we've got them titled correctly, our last step, you know what happened? I unchecked it. It's okay.
Oh, okay.
All right. There we go. 50 pullback and perfect. So, we can keep the strategy name in here, or we can just move the symbol over like that. It doesn't really matter. I think I'll just keep it like that for now. But we've got to delineate the pullback to 50 is a deeper pullback in my book, or anybody's book. 50 is less than 61.8. So let's colorize this with a deeper red, so our eyes can really kind of distinguish between the two. The foreground is going to remain black, and the background is going to be a darker red. Okay, so now you can see the delineation between the two. If I just go ahead and run a history, I'll do history all today, you're going to start to see how they stack up. All right, the deeper pullbacks to the 50 are in the red, and the pink ones are a Fibonacci pullback to around 61.8. And that is how you can do something that is related to Fibonacci pullbacks just using a simple running down alert and the position and range indicator filters. The position and range filters can be so powerful, guys, and that's a great example of it. So
let's check some of those. Let's check some of those 50s out just to see if.
INSY, look at that. Not bad. What else did we have in there? JBGS, that was at the end of the day. BPT, yeah, had a little bit of juice. JHG, a little bit of slop, but still turned up. Yeah, okay, not bad either. So I'm anticipating that people are going to want this, and I'm happy to share it. So I'm going to first save this because I've updated mine. I'm going to save to my cloud. So I have this going forward. And now I'm going to save and share to cloud for you all that maybe want to use it as well. All right, so for those who have not used the GoToWebinar interface, the chat window is open on that floating toolbar. Just locate Fibonacci pullback. Just locate the chat window arrow and touch that arrow to expand the window. And I've typed in and dropped Fibonacci pullback, and there's the cloud link. If you're not familiar what to do with that cloud link, if you just click on it one time only, it'll take you to the load from cloud page where you'll see multi-strategy window, and it's called the multi-strategy window. Now, notice that I did something there. I saved it in the history mode. So you guys, when you get it, you're going to have to right-click and turn history back to real time. So a little bit of skin in the game for you all. To make that work correctly. All right.
Actually, every time you launch it, it defaults back to real time. But
okay, good to know.
Yeah,
I know sometimes if I do that with a top list, it might not be the case. But anyway, that's that's the new stuff that we had to show you guys today, how to use a multi-strategy window for one, and how to just kind of redefine and reverse engineer what it is you're looking for. I basically was putting puzzle pieces together. First, I need the stock to pull back. Okay, that's my event. But where do I want it to trigger? Where do I want it to show itself? Well, that's the position and range. That's the beauty of working with filters and events together to make sure we're just not being bombarded with a fire hose of events. Because when Andy and I first started trading, that's basically what we had. This fire hose of window just shooting at us 90 miles an hour. New high, cross below, new high. And that's all we had before trade ideas.
Mm-hmm.
So guys, that's it for the prepared content. I'm happy to do 3 charts. If somebody's been sitting on a chart and waiting for that moment and you want Andy and I to put a pair of eyeballs on it, and it always helps to know if you're currently long or currently short or thinking about going long or thinking about going short. Sometimes it's nice to end these webinars with that segment. So I'll give you all, nobody's typed in yet. Okay. RUN for Christopher. And he is long at 860. Earnings date's not a threat. Relative volume today was pretty weak. And this is, I'm not too familiar with this one. Are you? Is this?
It's a solar.
Solar, I was going to say, yeah.
Mm-hmm.
Okay.
They're based there in San Diego.
Well, yeah, it's just creeping higher. And you said you were long at 860. So basically, I would say bar reversal time for you, Chris. You got a decent entry. If today's low is taken out, I'll move that down to today's low because so you got maybe, you've really only got, I'll move it to a 5-cent risk. And you can kind of see that's probably what I would be looking at. You're even going into yesterday's data there as well, and you're below those wicks. So I think you got yourself a 5-cent free look to see if it can continue to move higher. Not bad. I don't have anything really bad to say. Let's see. XPO was hitting new highs, David says. Yeah, it's probably expended some energy getting there. Interesting how today it had a little chop at the open, but found its way. Mm-hmm. Definitely broke through. So my next question is, how many are short this thing? Looks like 18%. And that's probably enough to where, again, we're all been watching the market try and see what is it going to do. Is it going to collapse more or is it going to bounce? And if you got 18% of the shorts there in XPO at a new 52-week high, more than likely, if I zoom out here, yep, new 52-week high, that's going to be something that could get them to scramble for the hills. Now, the only caveat on that is we've expended a lot of energy over the last 2 days getting there. My simple math tells me from 100 to 106, we've had about a 6% move. So it's been a big move, 6% in the last 2 days. It could chop around this level for a while, but keep an eye on it because it could become a squeeze me type of 52-week high short squeeze play. Because remember, the shorts are basically there's nobody in the money unless they shorted the tippy top right here. That would be the only person who is in the money on the short side. So when you see these 52-week highs and the price moving through it, you pretty much know that 18% of the stock is held by shorts, and none of them are happy at the moment. And if they start to scramble to cover, that could become an opportunity. All right, for Wayne, the last one is Jill. Jill Inc., women's clothing. Horrible gap, probably bad earnings, but now it has broken through its downside. This is kind of a trend change reversal play. Again, what's the short float? 10% on 14 million. So there's not a lot of float in the stock, so things could move quickly, but only 10% short. It's not really hitting the radar. It might not move the needle. And you can see it lines up pretty incredibly here. We got ourselves a pivot line in Jill. All right. That level that started trading down where the gap was for the most part resistance. We traded through that resistance, but look what it came back and did. It's now resting on that line as of today. If it holds that line going forward, well, there was a good trader that's not around anymore. He used to call this the vacuum cleaner trade, that the gap, and Barry talks a lot about this too in his room, that gaps were meant to be filled. And if you can turn and base and start to move back up into the gap, sometimes the price action can behave like a vacuum cleaner moving up. But I think the key level is going to be this pivot level here at about 527 for the most part. And this is kind of what I was saying, guys, that the market could do going forward. So we'll end with this. The market could do that exact same thing. It could come back, I'm going to delete that line. It could come back and settle right along that orange line right there that it broke out from. And if it can base off of that and move higher, well, then the bulls are going to be happy. The bears won't. All right, all. Thank you so much. Let me finish the presentation here since Scott isn't here. There's a couple of announcements. All right, we're in the middle of test drive, and if somebody's not a current subscriber, you've still got through tomorrow afternoon to sign up for 5 continuous days, so that basically that would swing into next week. You'd have a couple days next week, but you'll get 5 contiguous trading days with a test drive. For more information on that, it's only $888 to try it. TradeIdeas.com/test drive there at the bottom. Can give you more information on that. The podcast is something we've been doing every Friday, I think, barring one Friday because we were thin. But every Friday, in the evening rolls around, go to your favorite application for podcasts and just search Trade Ideas Podcast, and it should be pretty easy to find under those libraries. This was an ebook that was written by us, How to Survive in a Post-Buy-the-Dip Market. That's kind of what we've been in for the last 6 or 7 weeks here. And the timeliness of this book was pretty good as well. We released it in early February, right as the market started to free fall and get into roller coaster mode. So, honestly, guys, the trade of the week thought process that I was trying to convey to you was kind of taking a chapter out of this book. We were not quite sure if a sell the rips was going to happen, but it didn't appear to happen. So that was the good news. The pivot level held for the bulls, and we closed above that pivot level. But there will be a point in some time that the buy the dip doesn't work. And so the ebook is a great download. It's free, and we've all contributed a little bit to that. Spring Savings, all caps, is your promo code for today. 15% off your first month or first year of Premium or Standard. Of course, we've reduced it to the daily down here just to get a feel for, a cappuccino or a Starbucks or maybe a daily perspective on what a Trade Ideas subscription would be. Any questions, you can always info@trade-ideas.com, and we can triage your email and send it to the appropriate department. You can reach me directly, Steve@Trade-Ideas. I am at Today Trader on Twitter. Trade Ideas 1 is Dan on Twitter. And the phone number really is never really picked up. It's mostly a voicemail system for people that have accounting trouble, and we'll get you a call back within the same day on that phone number. So that's it. That's all I've got for you today. This was recorded. It'll be up on our YouTube channel in a few hours. And thank you all for showing up, and thanks for the questions and comments. Andy?
Yes. Thanks, everybody. I will see you Thursday afternoon.
All right. Bye-bye. Have a good day, guys.
Bye-bye.